challenge. Until fairly recently, most African monetary policies focused on targeting monetary aggregates along with holding real effective exchange rates reasonably constant. As the shortcomings of the system have become more apparent, many of the more reformist African central banks have started a journey towards formal inflation targeting frameworks, following the example of South Africa. After, of course, we're chatting now to Ridle Markus Africa Strategist from ABSA Capital. And of course, just before we get into that interview, let's just quickly check in on some breaking news when it comes to the inflation outlook in Rwanda for the month of July, falling 1.2% month on month, down 2.2% year on year, compared with year on year inflation of almost 2% in June. So clearly deflationary environment playing out there in Rwanda. Ridle, thank you very much for your time today. Let's start off with that Rwandan number that just came out now, seeing a deflationary environment for the month of July, down 1.2% year on year, a loss of 2.2%. So quite interesting that an African country is in a deflationary environment.
Yeah, of course, not the only African country. Recently we had Seychelles also and deflationary trend. However, East Africa inflation has generally been quite tame of late, and it has come down from earlier levels of around 10%, and I think it's around 6% for some countries. We've got, for example, Kenya at 3.5% even. So East African inflation, good agricultural conditions at the moment, food inflation driving inflation lower. So yes, that is quite possible.
All right. Well, just taking a look, let's look at various regions. Let's look at Southern Africa in particular, because we're seeing a very different scenario playing out in Mozambique and Botswana as well. Let's focus on Mozambique at this point in time, where we're seeing the July inflation figure around 16%, and that's from 5% in January. So a massive jump for inflation there.
Yeah, Southern African inflation has seen quite a divergent trend across the board. But Mozambique has been a bit of an outlier. We have seen the medical depreciating quite substantially since the beginning of the year. We also had some removal of fuel subsidies in Mozambique. So, and of course, because of the weaker currency, Mozambique is a very import-intensive country. Inflation did spike quite a bit. In Botswana, Namibia, we've seen a trend where inflation is just outside, maybe for Botswana, just outside the target range of around 3 to 6%, and we expect it to remain above that trend for the foreseeable future at least. They have had some increases in taxes, other issues including food coming through. So for Botswana, we do not expect the inflation rate to come within the target range until at least next year.
We also have seen a nice drop in inflation, the likes of East Africa, Kenya, from around 4.7% in January to around 3.6%. And similarly, we've been seeing Uganda inflation drop 8.9% in January to 3.2% in the likes of July. And then also just looking at Tanzania, 10.9% in Jan, 6.3% in July. So clearly a nice downward trend there, and it's really got to do with the food prices as well.
Yeah, East Africa, of course, like I said earlier, it is food prices. Agricultural conditions have improved quite substantially from last year, where they had a drought. So East Africa inflation, we expect it to be to remain quite benign over the next couple of months as well.
Looking at some of the trends as well that are going to be emerging, we've got the IMF talking about 2010 inflation around 8% for sub-Saharan Africa, and that's from 10.5% last year. For next year, they're talking about 6.9%, so a nice decrease there. Could you tell us the trends that will be pushing us in this direction?
Well, I think that was based mostly on the I think improved environment regarding food inflation. So food has really come down from the high teens to single digits, and that is driven inflation lower. And of course transport as well. And we haven't seen much of an upward movement in fuel prices either. So those two, I think, will be the major drivers, keeping inflation in single digits across the continent.
Looking at Nigeria, we had the central bank governor Lamido Sanusi on CNBC Africa yesterday, and he was talking about an inflation rate of around 9 to 9.5%. That would sort of, he'd be satisfied with that figure, but also focusing on the fact that it's really difficult when you've got an inflation number of above 10%, and you also have a lot of other things you need to take into consideration, such as growth, obviously inflation targeting, and unemployment. How do you juggle that as a central bank, given the fact that, when you look at the Fed, we've got a tri-mandate there. Here in Africa, we've got various mandates that go for various central banks.
Yeah, of course, different countries obviously adopt policies that work for them. And in Nigeria's case, they haven't adopted inflation target formally. However, they do have a target whereby they say that we want inflation to be in single digits. And the governor's statement around of inflation being around 9.5% by year end is very much in line with our thinking too. Though I would say that Nigeria does face some upside pressure next year. But as for the rest of the continent, again, it all depends on what kind of objectives most of these governments have.
Do you think we're too bogged down with inflation targeting in Africa as a whole, that we're looking for that single-digit inflation number? And we know that inflation also targets the poor as well. It does impact the poor quite extensively, but also when you're too focused on inflation targeting, that could also be a negative.
Well, of course, one of the big benefits of the inflation targeting regime has always been that investors do look at it, and there's a lot more investor confidence in a country where inflation targeting has been adopted. And then, of course, inflation has been a serious problem for the continent over the past couple of years in any event, though we have seen over the past few years inflation improving quite dramatically. So yes, there's been a bit of a focus on inflation targeting, but I think governments and central banks have been quite flexible in approaching it the way they have.